All right, ladies and gentlemen, hello. This is me, Darius Anucauskas from Markets.com, and today is the 8th of May, ladies and gentlemen. Today is Thursday. So, look, yesterday we had an interesting moment, I think, in the markets. First of all, we had the Federal Reserve interest rate decision that came out as expected, to be honest, but we'll dig into all that. Look, before we go any further, as always, we need to quickly have a read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'm not going to disappear anywhere, but yeah, basically, yesterday, like I said, we had a very interesting moment in the market. It seems like everybody got pleased in a way. So apart from, of course, one guy we all know, yeah, yesterday's decision, I think it was perfect. Now, look, also before we jump into any chart, let's quickly mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, look, just a quick reminder of what happened yesterday. So, yesterday we got the interest rate decision from the Federal Reserve, and of course, it came out as expected at 4.5. Now, let me just jump into this one. So, this is basically the previous image. We already kind of passed that, so now we're looking into June. Let me just refresh the page. There we go. So now when we're going into June, the current projection is that the rate will remain the same. And I think that could be the case unless some sort of stronger pressure will come out from the White House, and but basically yesterday the Federal Reserve kind of said that they still see potential problems with inflation, that it could pick up, and also that unemployment could get affected a little bit as well. So now, of course, the fact that inflation is expected to pick up a little bit, that is not in support of lowering rates in a way. On the contrary, when inflation goes higher, normally central banks do go and hike rates. Now, look, for now, I will say it this way. Like I said, the market got pleased by everybody, and looking at or should I say, everybody got pleased in the market. That's, I think, that would be the better for expression. Basically, yesterday indices moved nicely to the upside. That is because the Fed stood its ground. It didn't really fall under pressure of the White House, and we saw the index kind of indices kind of pushing nicely to the upside. And in a way, this kind of gives this reassurance that the market can, in a way, always count on the Fed, right? We saw Dow Jones rallying, S&P 500 moving nicely to the upside, Nasdaq also pushing higher. Even the dollar index made a nice move to the upside. Now, the US dollar here, in a way, I think moved higher just because of the fact that the Fed said that they're expecting inflation to kind of pick up a little bit. So where's that wording that I was looking at? So because basically they're expecting that the economic outlook has increased further, and that the risks of higher unemployment and higher inflation have risen. So basically, the fact that the higher inflation has risen, that kind of puts the Fed towards the idea of maybe stopping with the cuts at the moment. And this is what we're seeing in the CME Fed Watch tool right now, that for June we're not really expecting another cut. And jumping into the December side, okay, by December we're still expecting 3 cuts, right? So one, two, three. Okay, they will have to then somehow stick those into October maybe, and of course September. So again, maybe July they will start cutting. We'll see. Of course, we're not rushing into things, but of course the current higher probability says here in during the July meeting is for a 25 basis point cut, but for June. It seems like yes, we are kind of expecting no cuts right now. So in a way, it's kind of like I said. It's on one hand, it's still supporting the stock market because we're not seeing, let's say, despite the forecasts of a higher inflation, we're not seeing, the Fed coming in saying, oh, you know what, we're going to stop with the rate cuts. No, it's not the case. And like I said, and this is how it's working out. And the dollar index also pushed higher because again, they're thinking, oh, inflation is going to pick up, and maybe this will force the Fed not to go for more cuts. So you see, it's like you're winning on both sides in a way. And like I said, this is working out perfectly. So and look, for now, I would say this way: the U.S. indices. I think that given that we had a good rally here already, maybe we could see a bit more upside. But I'm not really getting very comfortable with the upside yet until I see some sort of either a nice correction back down or at least a somewhat of a prolonged sideways action on the U.S. indices. In terms of the U.S. dollar, the fact that we popped back above this upside line right here, or sorry, back above this downside line, this short-term downside line, which I previously called the neckline of a possible inverted head and shoulders pattern here. And yeah, I mean, this is, like I said, this is giving us a little bit more reassurance that maybe, just maybe, the US dollar could go for a larger correction back up. But for that, as I said before, I need to see a pop at least above the 100 level, 100.17 maybe even. So yeah, that's the area right here. And then I'll go for my EMAs and this downside line. Now, another central bank to keep an eye on today is, of course, the BoE, the Bank of England, but those guys are expected to go for a cut. Now, I think we can say that those guys are going for the Bank of England is going for a cut because, well, they're a little bit more uncertain with their economy, and they believe that they need to continue stimulating the market. Just a quick double check here. I went to double check the United Kingdom inflation number. So it's currently sitting at 2.6, the headline, and it has been on a decline, to be honest, since the beginning of this year. So it started off at around 3, and now it's like the latest reading came out at 2.6. So look, I think that the BoE is kind of worried about potential growth of the UK economy, and I think that yes, they're gonna do all they can to help it out. So, like, of course, the main thing that they can do is to cut the rate. Now, how we can what could happen here with the FTSE? Well, the FTSE in a way could continue pushing further north. In a way, of course, cutting rates is a good thing for the stock market, but with the situation with the pound. Now, the situation with the pound here, I talked about this yesterday in my morning video. That maybe, just maybe, we're forming something of a possible head and shoulders pattern. Now, somebody might say, okay, maybe it could be like a range or something like that, but it's not really. It's almost like a range, but actually it's more of a head and shoulders pattern with the neckline being around the 1.3251 zone. If that one gets cleared, and if that one gets cleared, then yes, of course, this opens the door to some lower levels. And why I'm leaning a little bit more towards the downside? Because the BoE is coming out, like I said, with the rate cut now, and the fact that, like I said, the US dollar is trying to show some signs of a possible move back up. Well, that's, like I said, all this combo is not really working out well for or might not work out well for for GBPUSD. So look, I'm not going to rush into things. Of course, surprises do happen, and we could see an upside move here, but I have to say that my upside will come on a break of this highest point of April, which is around the 1.3443 zone around here. So if we can get that nice clearance, amazing. I will go to the upside here because a forthcoming higher high will be confirmed, potentially attracting more buyers into the game. So, ladies and gentlemen, I just wanted to do, like I said, this little video on the aftermath from the Fed, and of course, just to warn you what's happening with the BoE and what to expect. So keep your eyes on it. Hopefully, you enjoyed this little video. Thank you very much for watching and listening. Let me know in the comments if you agree or not. But hey, have a beautiful trading day. Stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you next time in my next video update. Bye for now.